Hi everyone. So in this video, I am going to share with you my thoughts about where I think SENSEX is going to be by the year 2050. As you can see on the slide, I firmly believe that the SENSEX is going to be at least 600,000 by the year 2050. And in this video, we will chat about the reasons why I think that is the case and what is the relevance. Why should we care about this, and what does it mean to our investments and our money? So why engage in this exercise, right? Now, what is the point of this? Let's be honest here. It is fun. It is always fun to try and predict the future. Especially when it comes to stock market, right? Because it concerns our money. If we know where the stock market is heading, then we can make better investment decisions, and we can in the process make some money. So it is fun. And secondly, it gives you the right perspective, because in a lot of times in short run, when you're just when things are going south, and there is a lot of pessimism around, like how it is right now with the COVID and everything. It is always good to look back and see how the economy has done over the long run, and what is the long-term trend, and how the stock market has done over a long run, right? Because that informs us as to what to expect over a long run, and that gives us the right perspective. So we know that we are here for a long-term game, and what happens in the short run, while it is important, should not really make us go off course with respect to our long-term goals. So it is very important to have that perspective. And thirdly, you should always know, for any investment, before you get into that, you should know what the expected rate of return for that investment is. If you do not know that, then you're not really making a prudent investment decision. So it is very important to know that. So, for all these reasons, I think it is very important to engage in this exercise. So SENSEX at 600,000, right? It looks so far away, and it is far away, right? It is, currently the SENSEX is around 48,000, right? As I record this video. And we are talking about 600,000, which is 550,000 points away. So is it even realistic for SENSEX to cross all that distance and reach 600,000? Is it something that we will see in our lifetimes 30 years from now? I very much think so, because early 2000s, I remember people making predictions about SENSEX reaching 50,000 within the next 15 to 20 years, and it seemed so far away, and it seemed so far-fetched at that point. But here we are in 2020 and 2021, and SENSEX already touched 50,000, and it came down a little bit. So it always looks so far away, but it does happen. And and it is just pure math. It is not magic, right? It is just compounding. All it will take SENSEX to reach 600,000 by the year 2050 is to return 8.8% per annum over these 30 years, right? Again, it is not annual return, because it is not a linear growth that SENSEX will have. It is going to go up and down. So it is the annualized return of 8.8% that will take SENSEX to 600,000. And when you look at it that way, it very much looks plausible, right? Because the past has shown us that SENSEX returns are, generally we expect SENSEX to return an annualized return of about 10% over a very long period, like 20 years or 30 years. So, if it continues in that way, we will definitely see this happening, right? And, I think there is a very good chance of that happening. And, how do we do this? How do we estimate? And how did I come to this conclusion that SENSEX will touch 600,000 by 2050? There are three methods that are used. One is, just basically extrapolating the past SENSEX data, taking the past SENSEX returns and then extrapolating that into the future. And secondly, taking the past nominal GDP growth or nominal GDP growth rate from the past 35 years, and then estimating the future GDP growth from that, and then from that estimating what the Sensex will return in the next 30 years. The third method is to use, it's pretty similar to the second method, but in the third method, instead of the nominal GDP, we will take nominal GDP per capita, and then from that estimate what the future Sensex return will be. Okay, so those are the three methods that we will see in order to estimate Sensex. And one of the things that you will note by the end of this presentation is that all these three methods kind of converge, right? If one method returns say 600,000 and another method says 500,000 and third one says 900,000, then there is a lot of divergence. We cannot really be sure what the return in future will be. But all the three methods that I've used converges around 600,000, which means that is the return we can be very sure of seeing in the future. My own view is that it will probably be a lot more than that. It will probably be around 800,000 points, right, by the year 2050. That's what we will see with respect to Sensex. But given that all three methods converge around 600,000 points, I think there is a very, very high probability of that happening. So the first way in which we can estimate this is just take the Sensex data for the past 35 years. The reason I keep saying 35 years is because we only have history for Sensex for the past 35 years, right? Sensex came into being in 1986, the beginning of 1986. So it was around 549.43 in January of 1986, and then by the end of 1990, it touched about 1,000 points. So it went up basically, it almost doubled in those 5 years. By the end of 2000, it went up almost 4 times and went very close to 4,000 points, right? So it is 4 times in 10 years. It is pretty good return. And by the end of 2010, Sensex more than quintupled, or it went up 5 times in those 10 years. And that is despite the fact that we saw 2 big bear markets during that time, right? One was after the dot-com boom burst, and the second one was after the Great Recession. So despite those 2, recessions and bear markets that followed them, we still saw Sensex going up by 5 times in those 10 periods, which is mind-boggling, right? And in the last 20 years, in the last 10 years, from 2010 to 2020, as you can see, Sensex went up about 2.35 times, which is, not that spectacular considering the past periods. But in terms of points, in terms of sheer value addition, wealth addition, that is, the last 10 years is the biggest, right? Because we added about, close to 27,200 points in the past 10 years, right? So it is also very important to, note here that, there is, as we can see here that the returns do not need to be very high for you to add a lot of points, right? Because as you grow, as Sensex grows, even a small return is going to translate into a bigger points growth, right? So, an example that I can think of is, if you have a 100 rupee investment and it returns 10%, then you will gain 10 rupees by the end of the year, right? But if you have a 10 lakh investment that returns 5%, so that is going to add 50,000, right? To your wealth. So which is better? That is for anyone's, that is anyone's guess, right? So if all I want is, my wealth to increase, 5% return, gave me, 50,000 rupees. The other one gave me only 10 rupees. You can always say that, hey, I could have invested, instead of 100 rupees, I could have invested 10 lakh there. But what if there was a limit? What if that investment was available with a limit that I can invest only 100 rupees there, like PPF, right? Where you can get a slightly better returns compared to, say, liquid funds, but you cannot invest more than 1.5 lakhs there, right? So it is very important to know that if you increase your investment amount, even with a smaller interest or smaller return, you can still gain a lot in terms of the amount of money that you gained, right? That you added to your wealth. So that is very important to keep in mind. Um, so now, to project this into the future, what do we consider? There is no real pattern here. If you see from 1986 to 1990, Sensex returned about 13.79 per annum percent per annum, and from 1991 to 2000, it returned 14.25% per annum. So it went up, right? And from 2001 to 2010, it had its best 10 years, and returned about 17.84% per annum, right? So it kept going up, and in the last 10 years, it actually came down, right? And it was in single digit, it was 8.82%. So, it is, despite the popular perception that over the years, Sensex or stock markets will return less and less, it is not a consistent pattern, right? Because it kept going up for the first three periods, and then only the last 10 years, it has been lesser than par. So, it could be more than 8.82%. If you look at the entire 35-year period that we are considering, Sensex returned, somewhere about the 13.69%, if 61% in the past 35 years, from 1986 to 2020, which is spectacular, right? So if we just assume that Sensex will return 8.82% over the next 30 years, that is from 2021 to 2050, Sensex will easily touch 600,000 points, right? But if Sensex grows at 13.61% per annum, which was the annualized return of Sensex over the past 35 years, then it will grow to a whopping 22 lakhs, right? That is nearly 3.5 times as much as what I'm projecting. So my own sense is that it is going to be anywhere between 600,000 and maybe about 10,000 at 1 million by the year 2050. So which is still a very good decent return. If it returns anywhere between 9 to 11% per annum over the next 30 years, it is a fantastic return, considering the base effect, right? The second method that I've used is the past GDP data, right? So here I have laid out the past GDP data for the years 1986, 1990, 2000, 2010, and 2019. So these are nominal GDP rates, nominal GDP, absolute GDP of India, right, in these years. And these values were taken from the World Bank site, right, World Bank database. So these are official figures. The reason I've used nominal GDP is that nominal GDP is unadjusted for inflation, right? And our stock returns, Sensex, all of that is quoted unadjusted for inflation. So for this purpose, we are trying to project or estimate where the Sensex is going to be in 30 years from now. It makes sense to use nominal GDP instead of real GDP. So real GDP, for those who do not know, is GDP that is adjusted for inflation. But we are going to be using nominal GDP, which is not adjusted for inflation. So this is the figure. You can see that from 1986 to 1990, GDP, the nominal GDP, grew by 15.98% per annum. And from 1990 to 2000, it grew by 14.02% per annum. And from 2000 to 2010, it grew by 13.56% per annum. And from 2010 to 2019, it grew by 11.5% per annum, right? So the reason we have the growth rate till 2019 and not 2020 is because India hasn't released the GDP data for 2020 as of this recording. So we are not going to make any assumptions there. We'll just calculate for the last 9 years instead of 10 years, right? So it's 11.5%. So we can see that the nominal GDP growth rate has been reducing by roughly about 1% for each 10-year period, right? I mean, we only have for 4 years initially, but then, if you think that, for that decade, it was 15.98%, we can kind of from this infer that the nominal GDP growth rate has been decreasing by about 1% every 10 years. So if we just project this out into the future, from 2020 to 2030, that is for the next 10 years, now we can expect a nominal GDP growth rate of about 10.5%. From 2030 to 2040, we can expect a nominal GDP growth rate of about 9.5%. And from 2040 to 2050, we can expect a nominal GDP growth rate of about 8.5%, right? Every 10 years, it reduces by about a percentage. So this actually translates into an overall GDP growth rate for the next 30 years of 9.5% per annum, right? Which, and in the past, we saw that, SENSEX returned about 13.69% over the last 35 years. The nominal GDP growth rate, if you calculate the nominal GDP growth rate, annualized growth rate for the last 35 years, it is also eerily similar. It is about 13.01%. So we can see that the SENSEX over a very long run grows at the same rate as the nominal GDP, right? So we can just use the nominal GDP growth rate as a proxy for SENSEX growth rate in the future. So if we say that the nominal GDP is going to grow by 9.5% per annum over the next 30 years, then we can reasonably assume that the SENSEX will also grow at 9.5% per annum over the next 30 years, because they tend to grow at a similar rate over a very long period. When I say long period, it is about 20 or 30 years, right? So that means by the end of 2050, using this method, we can kind of predict that SENSEX will be about 720,000, right? Which is more than the previous method. But it is still in the ballpark. It is around what we estimated using the previous method. The third method is using the nominal GDP per capita, right? So again, I have shown here the nominal GDP per capita, which is basically the GDP divided by the total population of the country, right, every year. So that includes every man, woman, and child. So that this table here shows, the first table shows the nominal GDP per capita for the years 1986, 1990, 2000, 2010, and 2019. And the second table shows us, for the periods of 1986 to 1990 and 1990 to 2000, 2000 to 2010, and 2010 to 2019. What the growth rates for the nominal GDP per capita were. So here again, it started at about 13.54%. And then gradually reduced, and in the last 9 years, it was about 10.25%. So again, here we see, it is slightly lesser than the nominal GDP growth rate, but we see the similar pattern that the growth rate has been reducing by about 1% every 10 years or so, right? So if we just take this and project this into the future, we can see that we can project that from 2020 to 2030. We will have a nominal GDP per capita growth rate of about 9.25%. And from 2030 to 2040, we will have a nominal GDP per capita growth rate of 8.25%. And from 2040 to 2050, we will have a nominal GDP per capita growth rate of 7.25%, right? Overall, over the next 30 years, we will have a nominal GDP growth rate of 8.25% per annum. So which translates into a nominal GDP per capita of 16 lakhs, by the year 2050. And we also have projections for population growth over the next 30 years, and that is again official data that you can get from World Bank site. And that says that India's population is projected to be 1.64 billion by the year 2050. So if you just take this 16 lakhs and multiply it by 1.64 billion, that gives you the GDP estimate for the year 2050, right? Which I've shown here. I'm not going to try to read that because it's very difficult. It has a lot of zeros, right? So, so that is where the 2050 GDP is going to be at, by our estimates. And we already know what the 2019 GDP is, right? So if you just take that, if you find out what the rate of return is, we can or at what rate the GDP would grow, from 2020 to 2050 for the next 30 years, it is 8.9% per annum, right? So again, it is, if you take 8.9% per annum and assume that that is the rate at which Sensex will also grow over the next 30 years, we will again end up at 600,000 or 620,000 points. So, the first method and third method, gave us an estimate of about 600 to 620,000 points. And the second method, using the nominal GDP, it gave us an estimate of 720,000 points, right? So I think that that given that all three methods converge around this figure 600 to 700,000, there is a very high probability that we will have Sensex at about 600 to 700,000 points by the year 2050. So this is the methodology. Now that we have this estimate, what does it tell us and what does it mean to us, right? So what can we take away from all this? So we should not be really celebrating the all-time new highs, right? If you see, if you open the newspaper or look at TV, financial channels, they all keep reporting, Sensex has touched all-time new high, as if it's a matter of celebration, right? Or as if it's a rare thing. It is really not a rare thing. We just saw that Sensex has been touching all-time highs pretty much every year and every decade in the past 35 years. Otherwise, it couldn't have grown so much, right? It couldn't have come all the way from 500 to 50,000. So it is really not a newsworthy thing, right? So if you understand their underlying dynamics, you would not be celebrating the fact that Sensex is touching new highs. You expect it to be touching new highs because given that India is still underdeveloped and it has a long way to go, even to catch up with China and to catch up with some of the developed countries. We have a long way to go. We have a growing population. We have an aspirational, young generation, which means there is a lot of room to grow for the Indian economy, right? So what will be newsworthy is if Sensex is not touching all-time highs every decade, right? Then it is newsworthy, not just all-time highs. If it is not making all-time highs that are at least twice as much as the previous decade, then that is newsworthy. Otherwise, I don't think it makes any sense to be reporting all-time highs in media at all. But I can understand why they would do that because they want to fill their ad times and spaces. But otherwise, as investors, if we know that it is going to be touching all-time highs all the time. Otherwise, there is something really wrong with the economy, right? Because we have a huge population, we have a huge market, and we have a lot of room to grow. We know where we can go, even to touch China and eventually to become a developed country. There is a long way to go, and we are going to be making all-time highs for the foreseeable future. So it is not really something that we should be spending any time on. So we should just get on with it. And one thing this analysis shows us is that Indian economy and Indian equities are really great bets. In the long run, right? Nobody can tell what can happen the next year or next 2 years or next 5 years. How many people could have predicted the COVID crisis, right? So we cannot really say anything about what can happen in the short run, but in a really long run, in a really long term, next 20 or 30 years, we know that there is only one way the Indian market can go, Indian economy can go, and stock markets can go. So if you are in your mid 20s, you've just started working, you should start investing early in stocks, and obviously invest in PF, max out your PPF contribution if you can, and then the remaining money that you can put away, put it in stocks early, because once you have a family, and have other responsibilities, you may not be able to save as much, or you may be, who knows, but put money early because it will have more time to grow, right? And put away the money that you can forget for 20 to 30 years, right? So you should not have to worry you should not need that money um, for the next 20 or 30 years, right? So put it away. It is for your retirement. You have the next 20 to 30 years before you will retire, and by that time you will have your money would have grown manifold, right? And you will have a really sizable nest egg. So it is very important to start early. So yeah, so that's what I wanted to share in this video. Obviously, um, we can do better than 8.82% that I'm projecting here, right? By picking good companies at good prices. We will in my future videos talk about that. We will cover a lot of ground, and we will talk about specific stocks, and how to value stocks and so on. But I hope this video was helpful for people to know how to think about stock markets, how to think about the economy, and what to expect, right? Thank you so much for listening. Have a great day, guys.